Hello again and welcome. This is Robert Schein, Managing Director Partner of Blanke Schein Wealth Management. Thank you for our market insights and observations. Today is September 13th of 2022, and markets are moving, and not in the way we want them to, moving down. In fact, the Dow's down, S&P and the NASDAQ are all down close to pretty big time right now, a few percentage points to say the least. And why is that? Well, going back to my Friday insights and last week, this is the board that I created, and I basically said the U.S., the most important date is September 13th. So I keep it up here. Again, if you know, follow along. I keep all of these around here in our media room at Blanke Schein Wealth Management. And I said, the most important thing is, hey, listen, what is our CPI report going to come in at in August? And it was an 8.3%. It's actually hotter than what was anticipated. 8.1 was the anticipated estimated read for the month of August. This is still hot. I said anything with an A handle or higher, markets aren't going to like, and markets are selling off as a result. So as a result of that, we've got the US dollar is putting pressure. It's rising, okay, because interest rates have to go up. Now, we're also seeing that that means that the Federal Reserve has to increase basis points, 75 basis points to the Fed funds rate. Next week, they're going to raise interest rates. And the question was, prior to today's CPI read, were we going to have a 50 basis points or 75 basis points? Well, 50 is out the window, 75 is priced in, and now they're going to, the Fed funds future markets are going to 100 basis points. We believe at Blanke Schein Wealth Management that Jerome Powell will be steady and steadfast, and he will continue to communicate what he did and do what he says he was going to do, which is a 75. But then that puts in the next one, which is it a 50? Is it a 75? We're going to continue this sort of Groundhog Day of a procedure, if you will, with regards to guessing what the Fed will do. But really what's dictating this is CPI report. It's affecting every aspect. Obviously, shelter is up, as well as food is up. Energy's come down a little bit. We talked about food and energy as part of the core CPI, but energy's come down by 5% in the last month-over-month read. But it's all about kitchen table economics at the end of the day. And if it's not just food or shelter, let's look at the mortgage interest rates. Mortgage interest rate market hit a 14-year high right now on a 30-year fixed at 6.28% today. So we got a strong dollar. We've got a higher mortgage interest rates. And then we're going to have the basis points, obviously, interest rate hike next week. And then the CPI was the culprit of everything. Again, it was September 13th is what I discussed last week. Now, we're positioned for this at Blanke Schein Wealth Management, and we're fully aware of sort of market ranges. So in the short term, when we get stuff like this happening in the markets, we pay attention to basically the trading range, if you will. Today is a 1,000-point down day that we're seeing in the markets. We're putting money to work. We like this long-term. If you're a long-term investor, yes, these are short-term issues that will be resolved. They're not going to last forever. And when they roll over, we're going to look back and say, hey, listen, were we taking advantage of it? Were we being proactive? Were we looking at long-dated, sort of good businesses that we want to own at our great prices in terms of not only their valuation, but obviously the price to earnings multiple? And are these companies still able to execute in an environment on a go-forward basis and make some money? In fact, the answer is yes. And the shopping list is long right now because there's a lot of good deals right now. So we're nibbling and we're putting cash to work. I've talked about this for about a year now. We've had cash on the sidelines. We're starting to putting a little bit more cash to work because we get days like this where they're not going to last very long. And so we want to be proactive versus reactive. And that's what we're doing for our clients at Blanke Schein Wealth Management. So we like shopping days like we see here. Now, the trading ranges, okay? So we're not going all in, okay? We're going to let this play out. But right now, we're about a 39.70 on the S&P 500. The ceiling is about 4,200, meaning if we trade towards that and then we don't break it on the top line resistance, that means that we could see the market selling off from that point forward. If we break through the 4,200, which we're not near right now, that means that the market continues to have momentum and it's a positive sign. Now, conversely, on the downside, this is sort of where we're focused at this moment because of down days like today. Again, we're at 39.70 as I film this from the S&P 500, but there's a 3,900. So the rest of the week, how we play out and how we close. Do we stay in that range between the 4,200 and the 3,900 for the S&P 500? Ultimately, we believe we'll bounce around. It's not uncommon to test the 3,900 level when you get sort of big economic, sort of unexpected days where you're sort of caught off sides. At least a lot of people on Wall Street were. So we'll just see what the next couple of days look like. Again, it's not how you open, it's how you close in markets like these. And it's also sort of the Friday closes as well. So we're going to continue to be on this for our clients. We're going to take advantage of opportunities. As we said, we love to go shopping in down days. Everything's on sale. When high quality is on sale, that's a good time for long-term investors. So that's our update for today. That's really what's happening here. It's all about interest rates. It's all about the Fed and what they're going to do next. Again, inflation's hot. We got to get it to roll over. And once it does, we could see some more green back on the screens. That's our update for today. Thanks for watching.